In the 212th BlockTalks, we speak with Satraj Bambra, co-founder and CEO of Rails, who tells us how regulatory compliance can power crypto's growth strategy. I'm your host, Mauricio Magaldi, and this is Blockdrops, your weekly digest on blockchain for business. These news are not a form of endorsement, sponsorship, or encouragement for consumption, and are meant for educational purposes only. All right, everybody, I'm here with Satraj Bambra, who's going to tell us who he is and what he does with blockchain. Satraj, welcome to Block Talks.
Yeah, hey Mauricio, thanks for having me. My name is Satraj Bambra. So I'm a software engineer. That's my background. I built and sold two companies in the past. One in the app and SDK space. It was acquired in 2015, I believe. And then I built an early DEX on Stellar called BlockEQ that was acquired by CoinSquare, a Canadian crypto exchange, in 2018. So I've been a builder in the space. My first familiarity with blockchains probably around 2014, 2015. Ethereum's out of Canada, so that's sort of how I really got into it. A lot more from a development standpoint than from a speculative standpoint. I was more curious about the entire thesis of a decentralized world computer. So that's sort of how I got into the space. And then fast forward to now, before starting out Rails, I do run the largest crypto fund in Canada. It's called Around 13 Digital Asset Fund. I manage the liquid portion of the fund. So over the years, I found myself being a very good trader. I've traded on a lot of the markets, specifically perps, and sort of done really well. I managed the liquid portion of the fund, and that's also performed pretty well so far. I was user of FTX. We had our money on FTX, and that sort of was like what sort of got us to starting Rails. And Rails is a hybrid perp exchange. Our thesis behind it is as a tech stack, right? Like as you're building a tech stack, a lot of what blockchain has been for me over the many years is its tech component, and I think you have centralized compute scale that cannot be beaten by the blockchain at all, and I think as you get more decentralized, you get slower. So we wanted to build an exchange that gets faster over time, not slower. So that's where the central compute sort of comes in from, and then having learned lessons through like all the counterparty risks of centralized exchanges, you want to have your funds on chain. On chain is like this amazing piece of tech that's now at its sort of renaissance point, and if you combine the two tech stacks together, you get a really really good product, and I think that's sort of the thesis behind Rails, and we've we built Rails over a 2-year period where we launched around 2.5 months ago. We've been live. We've done over $1.5 billion in volume so far. So we're very young. We have a very good team. We have a big challenge ahead of us, but we're all up for it.
Well, we're going to talk about the challenges, but first, I think I want to kind of explore your pre-crypto or pre-blockchain background. What was that, and what from that uh, made your interest about blockchain and decentralization prominent? Is there any particular epiphany moment that you remember from getting across with crypto and realizing, I want to do this for a living?
Yeah. So I think one of the things that I've been lucky in is sort of catching sort of computing platforms early. So I was one of the first iOS developers in Canada, like very, very early. There's very few of us doing it when I started doing it. And I was sort of on the cusp of mobile. And when I was there was not many people doing it. It was a big boom. It resulted in our company doing very well, and us sort of building a good reputation in the space. I still have some of those blog posts from I think 2012, 2013 still sort of lingering on the internet somewhere. And I think with crypto, it's kind of similar. When I saw the blockchain and Ethereum specifically, I was skirting in and around with Bitcoin. I never really got interested in it until much later. But with Ethereum, it was a computing platform, a decentralized computing platform. And I remember when I first came, I was pretty like I was pretty amazed. It seems pretty interesting, but very clunky to use. I think still pretty clunky to use. And then I think the reason we built on Stellar was that it was pretty interesting. It was faster. Uh, the APIs were stronger, better, and that's sort of why we sort of built on Stellar. But I was also like being an iOS developer. I think user experience is one of the most important things that you think about, and you sort of wanted to bring that to blockchain, and that's why you wanted to build on something that's a little bit faster and works around, but also helped my investment and trading thesis as well. Like when I went from Stellar to Solana, which was like one of my big trades of 2021, I always found Solana being the more souped up Stellar at that time because it had a lot of liquidity behind it. You had that sort of like the famous SBF tweet where it's like I'll buy everything, I'll put all the liquidity. So it's like it's one has led to another in a sense, but it all comes from the thesis around new tech platforms.
So you're usually an early adopter of the new shiny thing, I guess. That's
I would say so, and before that in college, online poker was very interesting, very early adopter of that, and before that getting into like domains and stuff like that. So it's always been about trying to see what's coming ahead and what's new.
I love that. Yeah, I mean, I guess if you've been in tech for any number of years, it's usually attractive to think of the new thing as the thing to pursue. But what I find interesting about what you're telling me is that you actually turn them into actual businesses and actual products, which is not something you can really tell a lot about new technologies. I mean, I've been in crypto for 11 years. For the first half of it, it was like, oh, this is a solution looking for a problem. That was kind of, where that was. But at a very niche level, it was solving problems for very niche use cases, which continues to be true. It's just that now some of the use cases are just mainstream, right? The whole point of stable coins have been around for 5-6 years, and now it's kind of stablecoin summer, almost, if you will. Um, but let's go into your more recent years. I mean, you have quite a lengthy journey in crypto or blockchain technology, and you've made choices that both speak to your current role in trading liquid assets, based on that, and you build for pretty much for yourself, if I got this right, which is what most successful entrepreneurs do. They find a problem that annoys them to no end, and they take the matter of fixing the problem in their own hands. And I guess that kind of where some of your story went. How was coming up with the need for Rails and that combination of like decentralized and centralized technologies to kind of optimize for what each one of them does best?
When I start that process of sort of thinking about a company or thinking about what a company may be, I always try to think of it from sort of like a product angle and if it makes sense or not. And one of the things I go deep down is like where does this product look like in like 5 or 10 years, right? And I think that a lot of the stuff and crypto is known for its like boom and bust technology cycle. So you will go through periods where you'll have something that's the hottest thing ever, and it's 2 years later no one uses it anymore, and that's something that's very that's at a very extreme level in crypto. So and I think one of the things that I felt is very important is you have to be regulated. You have to be so a lot of the you see you have a boom cycle for very non-regulated tech in the space right now. So like there's a lot of stuff that like when I talk to a lot of people in the TradFi world, they don't want to touch dexes because they don't know who the counterparties are. They don't know if they're regulated. So so we built around the principle that we want to be regulated. We have a lot of experience working with regulators back from 2018 and stuff, and I don't think you can escape that. I think that is also cyclical because you have like you have like right now you have sort of like the Trump administration, which is obviously opened up regulation. It's a good thing for the space, but I don't think this is sort of something you can say that this is going to be like that forever. I think that if there's any change, you're probably going to get back into a stronger sort of like regulatory framework. So if you want to build in the long run, you have to think about regulations. I just feel like you can't survive being purely decentralized because there are all these like rules and thinkings behind how how banks and how everything else works, and I don't think you can live in an echo chamber of yourself because at the end of the day, like, we're all happy that TradFi is buying crypto right now. Think about the entire thesis of crypto when we came into the space. It was all like it was anti banking, anti TradFi. You sort of, but everyone here is happy. They're all watching how much inflows come from BlackRock and and other things. So at the end of the day, we can't escape that sort of the TradFi belt. And I think that our thesis around crypto being a tech stack more than a philosophy is more long term viable. So we built around regulation compliance and around product. So one of the things that I noticed when exploring dexes was they start out fast because they're all very centralized in the beginning, and when they actually get decentralized, they're super slow and super clunky. And I've seen that arc sort of play out in the past, and I don't think anyone can tend to escape that. And there's a lot of hype around when the prices are up and the tokens are doing well, then the product's amazing. When that clunks, everyone hates the product. So that tends to happen with the space as well, because speculation is sort of built into the product experience with us. That's why it's very up and down. But so that was one of the thinkings. How do you build a regulated product? How do you ensure that performance is the key benchmark? Because a trading exchange has to be super performant over the long run, and we obviously are not where we want to be at a full scale level, but we are very much up there, and we're scaling up every single day. Like the team's making it faster and better every single day, and I think that's something I'm very excited about. Whereas if we went fully decentralized, we're going to get slower and slower as we keep sort of moving that thing. So I think the hybrid approach makes sense to building a long-lasting product in the space. A compliant approach makes sense, even though people don't like KYC, KYB. I think if there's any regime change, if there's anything that's the opposite of what we have right now, we still are built to last. We're still built to work with institutions, and still built to deliver a great product experience over the long run. So that's sort of the thinking behind it.
I like that. And I also like that this kind of be prepared for the winds of change, because you can't be successful in the longer term if you build for a very specific set of circumstances. Even if the product is successful in the sense that you have users and you have volume, as it is in your case, you are subject to be inserted in a reality that you can't control. So being able to play against that, or in favor of that, better, I think it's an important factor. I had a few founders in the show that were um, they're adamant that regulatory compliance was a strategic differentiator for them at this stage of the industry. And I was like, well, if you told me, like, when I found Bitcoin 11 years ago, that I would be excited about, regulatory clarity or jurisdictional, like, no, I would have, laughed, off my chair, in light of that alone. And yet here we are. I mean, I still have, one of my feet are in the dgen pool. The other one is on the, TradFi adoption, regulation, clarity, transparency, efficiency, on the other. And um, I hear you say things that play to those two kind of worlds. So I have to ask, how has it been facing the regulators in Canada, where you are, or in the jurisdictions where you guys are operating? How has that changed over the years from your early days in crypto to now, that you've seen points to a direction where, oh, they're getting it now? Oh, they are starting to frame it in a different light. I get the Trump administration point, which is not to say it's ideal. It's blatant for sure, but it may not be ideal, because I also play with the responsible innovation space. I also play with perhaps the more regulation or less regulation is not necessarily the right way, but proper regulation is, and it takes time to settle. So I want to hear a little bit of your experience in dealing with regulators over this period of time, and what changed and how is it changing, and maybe even which decisions you're making that kind of resonate with the regulators or still, you know, make them raise their eyebrows.
One of the things I've seen, because I've sort of talked to regulators back in 2017, 2018, and I'm talking to them now, and I think the biggest thing is, look, right now crypto is no longer a joke sort of like, it's not a joke tech stack in a sense. Like, people, there's a lot of value that's being transferred every day. I think stable coins are having their moment, which they should have. Stable coins are phenomenal ways of transferring funds all over the world. Like, you cannot. I don't think you can you can beat it. It's probably one of the best ways, and it's good tech. And I think in the long run, good tech that delivers value to people tends to stay. And I think crypto's sort of its tech moment is right now in play. The problem is it is threatening technology to traditional sort of banks and stuff like that. So you're going to have the politicization of the regulation, and you're going to have both the strong set which you had before the Trump administration, you're going to have the pro set which you have now, but I think eventually it lands somewhere in the center, which means that I think a lot of people I talked to today who are extremely bullish are confusing deregulation for no regulation, and I think that's a bit of a mistake, because eventually it's going to center up, and at any instant it can go from friendly to not so friendly as soon as there's a turn of table. So I think in that way, if you're building in the space, you have to be thinking about it. Also, it's all about capital, right? Like, if you think about the world as a whole, there's this massive pool of capital that moves back and forth between value. And the value sort of transcribed between assets and products and all of that stuff. So I think crypto is just one of those asset bases and one of those value creators. It's cannot be treated in its own sort of set, and it has to mix up so for it to grow. Like, for us to see Bitcoin sort of take over gold, you need a lot of the people to flow out of gold into Bitcoin. So I think that's one of the things where it's not a separatist technology. It's just it's a new set of technologies that has to be adopted in for where it makes sense, and for it to get adopted at a global massive scale, it needs to work with how the rules of everyone else how they work. Otherwise, it won't get that adoption, right? So, and to my previous point, the reason people are so happy that ETFs exist, regulated technology, by the way, is because there's more flows into our bags. So, you know what I mean. So at the end of the day, it's not things. So I think the way we're thinking about it, like, and if you think about it in a very sort of long term way, it's got to be, you got to look at the tech stack behind crypto, and there's a lot of interesting stuff. Like I said, for us, the part that made a lot of sense was the on chain custody. I think using that with a centralized trading engine makes a lot of sense, and it builds a better product in the long run. So that's the way we're thinking about it, and I think. You look at stablecoins; they're going to have they need their bills and regulations to be passed for them to be used all over the world. So otherwise, they just don't work in silo. So I think that's sort of how I'm approaching this.
In the sense of challenges, I mean, we kind of brushed it off at the beginning of the conversation, but I do want to maybe understand your process, right? How do you tackle them? How do you prioritize them? In the sense you spoke about the team focusing on improving performance, which is relevant to your product market fit. But what are the other challenges in building Rails, or even your previous products that you kind of exited successfully, that you're now being able to kind of orchestrate better? The lessons are, over time accumulate, and you get a better kind of workflow to handle with such things. So I would love to explore a little bit of that in your process.
Yeah, so I think for us, the biggest challenge is always going to be liquidity. Liquidity is what makes exchanges function. Uh, People with size, like we trade with a lot of size at round 13, and for us, liquidity matters. So when you're coming and trading with large size, you have to think about liquidity. Building a new exchange, getting liquidity up there is obviously very, very difficult. We're working towards it. It doesn't happen overnight. Sort of, it takes some time. So you have to build all your, because one of the things we can do as a regulated exchange, we can create a vault put ours and our user funds and use that funds and market make on our own platform. So that's sort of like it's we can be this black box of liquidity, and so we have to work with external market makers who are regulated as well. So that's a big challenge. But one of the positive lights I've seen is some of the biggest money that wants to trade on the on in the world, they also have the same challenge. They don't want to work with non-regulated places. They want to be safe. So we're getting into a lot of conversations with large like allocators, trading firms who are not going to touch decentralized exchanges because of the regulatory burdens that they carry. And I think that's somewhere I think that if you so there it creates this little vacuum for us to try to build the best product to sort of fit that niche. And I think over the long run it becomes our staying power.
I'm a product person, so I'll have to ask, what's how do you prioritize? How do you pursue your user? What's the process you use to make sure that? I mean, I know you're somewhat the user of your own product in this particular scenario, but that wasn't always the case, right? So, how do you usually approach developing a product or a technical product in the way that you do?
First and foremost, you build for yourself. You have to build. You have to iterate. It's taken us 2 years to build Rails before we even released it. So we had to cut and stuff. We're building hard tech. We're joining central and on-chain solutions. It's not easy to build, so it takes a while. We have a fantastic team. My CTO, our engineering team is very very solid, and they have experience building both in crypto and outside crypto. So a lot of that sort of learnings is coming to space. And then in terms of pursuing users, I think we're just going out. We obviously start by reaching out to the people we know who want to trade, and then we just go outside and keep sort of building off that. We've built a decent sort of like Discord channel. We post on socials. We run competitions. We've raised a good sum of money. I think we've raised around $20 million. So we have liquidity to sort of kickstart things, and we're at that phase. We just finished our $1 million summer competition. So we gave $1 million in our first summer being live to traders every week, and so we have incentives coming in place, and that's just like with anyone else. I remember back in it was 2017, Binance was giving Lambos for people to trade on Binance. So everyone has to sort of start somewhere, and we're in our starting phase as well.
In terms of moving the strategy forward on as you build it, are there any particular goals that you guys have that you can share, obviously, that you guys have in mind? I mean, you offered a few KPIs that I feel are very interesting, but what's your north star in that sense in terms of strategy? Is it um, traded volume at a particular level? Is it the number of accounts? Is it global expansion? Like, just as a moonshot for what you're building, what are the things that really pull the team towards that one single goal?
One of the things that I love about our team, we have very strong like compliance frameworks. Our compliance operations, like all of that stuff, is they're very good at what they do, and I think our licensing strategy is pretty good. So, and like I said, building for the long run is definitely one of the strong sort of thought patterns that we have, and going out there and building our strong like our relationships is very important, especially with the existing relationships we've built in the space over many years, and working with them to sort of get so going cross platform is something we're working on. So right now we're on Inc. Kraken, because Kraken's an investor in our thing, so we're on Inc. But we're going to begin exploring going to other chains, so we can sort of begin to grow liquidity around working with tier one market makers. And we're looking to work with market makers not just in crypto but outside crypto, who provide a lot of liquidity outside, so bringing them onto the platform. And I think that's what I think. So that hybridization of just our tech is not just there, it's also in our philosophy and how we want to get everyone sort of trading here. So I don't think of us as like a crypto trading platform. I think of us as a trading platform, and we use tech stack from crypto, we use tech stack from regular sort of like what do you call Web 2 tech, and we join them together exactly, and we build that. So we're not philosophical about our tech. We're definitely we're starting with crypto perps, but we have a lot more products to offer. We want to have some very strong partnerships with other TradFi players in the space, some who we're talking to already, and bringing all that together so we can have this one really amazing sort of per product, and obviously expand from there.
You pivoted your own career from being a builder exclusively and now running the fund. How did you arrive to that decision? And was this more of an opportunity? Was this more of like, oh, this is now more fun than what I would have hoped? There are all sorts of I keep imagining what prompts that change, and how did you tackle getting ready to be good at that as well?
Yeah, so that's a good one. I've actually talked to a friend of mine, Trader Main. He's pretty well known in the space in the trading space. But I've talked to him. So I'm from the same era as he is, and a lot of the other ones are. I just never had a social media presence. So but I think what I find very interesting about the space, especially what I found very interesting back in the day, is speculation is built into the space. So whether you like it or not, we're all traders. Oh, some of us are good, some of us are very bad, and but we're all coming in because we like the we buy stuff, then we use stuff. And then when the price goes down, we don't like the stuff anymore. So that's kind of how the space works. And if you're technical, you find some interest, and you sort of see that. But I think speculation is one of those things that's built into, it's the core DNA of the space. It's just the way it works. And so everyone, whether they like it or not, is some way or form a trader in the space. And some are professional, some are not, and sort of all of that. What I noticed was I had this sort of like thinking sphere that comes from my early days in sort of playing online poker in school. Is what how do you sort of bankroll manage your fund? How do you react to different? How do you put in a bet? Like, what makes you make a decision to put in a bet, right? And I think when I discovered perps, I was like, damn, you can make money both ways, up and down. And I noticed that in my early days that a lot of people were long only but never prepared for the downturn, and I always had that inherent fact that, so I became very good at shorting. That was my sort of skill set in trading, and I think being a good shorter in the market makes you a very disciplined trader. So because you know your upside in shorts is limited, it's not to infinity like when you long. It's 100% max. You get really good at measuring your risk, your reward, ensuring you're disciplined, and getting in and out. So I think I built a lot of my trading sort of skills in the bear markets. So, and that's believe it or not, I enjoy bear markets a lot more than bull markets because trading is a lot more fun in bear markets. It's a lot more easier. I find trading in bull markets much harder. So, and that sort of helped sort of build up. So, for example, when we started the fund in 2022, that was at the top of the market, just before we had the interest rates and before everything crashed. And we raised all this money for our fund, and we never deployed anything. I just told them we can't deploy right now because interest rates are coming, everything's going to crash. And we didn't. And we started deploying right at the bottom of the market. So we started deploying when Bitcoin was in its 20s and Solana was in its 20Ks, and Solana was in that 20 to 14 sort of tight range. And that was like a good value sort of entry, because the way the space works is good stuff always tends to come back. It's just the narrative drives the price, that drives further capital. That's sort of how it works. And we got some great trades at the bottom. And always buying people's liquidations is the strongest form of free money in crypto you can get. That's always what I find. So I love to be a liquidation buyer.
That's a very interesting kind of approach to pivoting. Um, in terms of the industry in general, what do you think that the one thing for us to fix right now to ensure long term feasibility and even success of the industry, to avoid 20 years from now looking in hindsight and realizing we didn't fix that one thing and we never got to where we would have hoped as an industry? What do you think that one thing is, and why?
That's such a great question, and it's such a hard question to answer. Because I think the space in itself is its own sort of like is its own sort of like it's both the poison and the non poison, and it's built into this. into the it's a catalyst in the space itself. So what I mean by that is that you have this amazing tech that allows a free transfer flow of value and all over the planet. So it's amazing like that, and you have everyone can participate and stuff. But then you also have the full like speculatory like growth curve built in as well, which means that if you have something that runs very hard, very fast as a cycle, and everyone gets destroyed, it just never comes back. So it's not immune from these like this what I call like the flash floods of trading, like these hurricanes that they keep in, like you saw with the meme coin sort of run, and then you have a lot of exploiters in the space that come in and take full advantage of that. So I think on it's very hard then to answer that question because fixing it requires a complete change of value principle. So you say that the easiest way to fix this is guys just build for the tech, find reasonable ways to create value. So value is only driven by usage in your product. So don't create tokens that are not value driven, that are not speculative, and that basically means don't create crypto, right? So it's like, so I think it's a very difficult thing to answer.
That was the greatest non-answer I've ever had, and really, I think that's kind of where I think the that particular question prompts us to go in that discussion.
Like I don't think you can. Yes, you cannot pinpoint one thing and say you fix this, the space will survive.
There's always a perspective, right? If you're obsessed in a particular angle in the industry, which is kind of your non-answer is a very good answer to that because that's your focus. But yeah, there's I've had many flavors of this, and this is a great one. I'll tell you that. Now this is also a 24/7, 365 industry. Even though you have your centralized part of your stack, the decentralized part of the stack works 24/7. It doesn't stop. It doesn't matter. And now we're don't even get me started on the agentic Web3 yet. So let's not go there. But I do have to ask, what is it that you do on your day to day, your habits, your routines to maintain health both mentally and physically, as you do the things you do?
Yeah. So one of the things I've learned is not to take life too seriously. I always sort of like you can only do the best you can do, and if you're really focused on stuff that matters, because the problem with crypto is because you're so locked in, and you're just not locked in from just looking at a chart or the price of an asset. You have its social channels. So there's crypto Twitter and a lot of good trading ideas coming from just looking at crypto Twitter. So I think time boxing uh, stuff is very important. I think stuff like social media is a net bad for the world, and it's one of those things where it draws you in and makes you politically charged up both in crypto and outside crypto. So keeping yourself away as much as possible so you can be very focused on your problems and your solutions, although very difficult, is very important. Like we make sure we build, like on the exchange side we have, first of all we make sure we build good tech so we don't have to keep waking up at night and fixing it, and the other one is ensure we have alarms and processes in place so when things happen we can sort of come in. But I think it's very important to live a balanced like hardworking life, but not a terminally online sort of like crypto life. I think that's very dangerous because on a trading front, I can tell you that being online and trading all the time is basically a recipe for losing money. There's no way you can make money being trading all the time. Like I think for example, for like our best trades happen one or two or three times in an entire year. Outside that, we're just wasting our time scrolling the phone. You know what I mean?
I know exactly what you mean.
So learning to stay away enough so you can focus on stuff is very important, and I think that's part of what I'm trying to learn, to build a very strong offline working atmosphere that has nothing to do with social. Because I think right now you have, like, you look at even like things like Slack and stuff. It's all there's there's good parts where you work together, but there's a lot of part that's just like it's very social. It's very like, or like, it works like a social network feed. So like something like Slack's not work. It's a tool for getting people to work together. Same with like crypto, Twitter, and all of these things. Like being terminally online is a very bad philosophy for being productive.
So you're a non-metaverse guy, which I appreciate. In terms of like onboarding new people, I know you're in the trading space more frequently now, and you pretty much have to do it. But from people from your past that were not in crypto and see you now doing what you're doing, and they call you, "Hey, Satraj, can you just bring me up to speed? There's this new Bitcoin all time high. How do I get in?" What's your usual way of welcoming the new people into crypto, whether they're a builder or whether they are a more financially inclined person? What's your method?
This is going to sound funny. The first thing is always start with non-financial advice, because you know they're going to come and buy something. So you don't want to be the person responsible for them getting rugged. So I think that's the most important thing. But I think what I do tell a lot of new people is to actually come in, understand the tech, understand the principles behind the tech. Like Bitcoin is phenomenal, it's amazing tech. Solana, Ethereum, these are all like th- there's a lot of value capture and value transfer that happens with decentralized technologies that you can learn about. And then when you if you want to invest, then build an investment thesis around why it makes sense, what value capture you're seeing, and then sort of transcribing how speculation is built into the space, because crypto moves in a very different way than traditional markets. I actually think traditional markets are beginning to move like crypto now. Before they didn't, like post COVID. Since GameStop, they're starting to sort of like have big movements like crypto does. But I think that, yeah, one thing I will say is we are in a very interesting uh, place in the world, because and I think that's where crypto has a very big it has a big place because of where we are in the world. So we obviously have ballooning debt all over the world. We have fiat debasement at record levels. That's never going to stop. So I think people are beginning to catch on to that, and people are like, back in the day, I remember you would have people from like Turkey and stuff trying to buy USDT as fast as possible so they could protect their assets. And now you're seeing people even on the West realize that everything is going to shits eventually. So it's time to get hard assets, and Bitcoin is a hard asset. And there's obviously a race to accumulate it, but because of the way the system works, you're going to have big runs and you're going to have big purges on its path to its destined path to a million, I think. So people have to enter with the long term in mind, and know what's sort of playing out, and where do they enter, because there are some nice themes around crypto that work with the debasement of fiat, but there's also places where they can be extracted for value because it seems like a very easy place to make quick money, and I think that's where a lot of people lose heavily in crypto. So, and I think there's a lot of lack of education around stuff like it seems pretty easy until it's not. Like you see people I'm here, I made $20 million in a single day, I bought for 300, but that's like one person. But did he even keep the 20 million, or is he back to $300? Like, I would say most people have this round tripping arc, and then they never take profit. So I always tell people that if you actually do make money, please keep it.
It's always the responsibility, right? Acting responsibly and having that kind of frame of mind that easy come, easy go. So if you're really in the industry to make it better, well, then work for it, right? So I think that's kind of where it lands. Whether you're a trader or you're a builder or you're an enthusiast or just a curious person, I think approaching things with responsibility to yourself and to the market or to others, I think that's kind of great catch there.
I was gonna say one thing that I've seen in the space that's very interesting is you do get smarter being in crypto than not being crypto, because you get to learn about stuff that impacts markets that you would never think about outside. For example, you'd be looking at wars and what they're doing right now, and like everyone, like they have this joke, like everyone becomes like a war analyst when wars come up, because everything affects crypto. Like they become an oil analyst, and so I think what it does is on a broader space, it makes you more educated about how the world and world markets work. So I think that way crypto is a pretty good tool. It gets you more educated, but yes, you have to be responsible, and you have to think a little bit more deeply than you want to think about how you invest and how you put your capital at work.
We're about our time, so I would really want to thank you for taking the time and sharing your background, your perspectives with us here on the show. How can people learn more about what you're building, where you're going to be speaking if you're doing any of the conference circuits, and how to, in general, get in touch with you?
I'm on X. I'm at Satbam on X. You can also go to Rails. Rails is Discord. You can join Rails. But yeah, a lot of my stuff, I don't post very actively, but I do post on X once in a while. And yeah, and more podcasts like Mauricio's. I just started doing podcasts, by the way. I haven't done them before.
Go Ape, I love them. They're awesome, and I'll look forward to hearing more from you in other shows for sure. Satraj, thank you so much, man. Have a great day, and bump into you sometime in the world. Who knows? Crypto's small.
Absolutely. It is. It is. Yes. Good to meet you. And thanks for having me.
Thank you. Catch us online. We're on Instagram at BlockDropsPodcast, on Twitter at BlockDropsPod or 0x Mauricio. We're on Lens at blockdrops.lens. We have a newsletter on LinkedIn. Write to us at blockdropspodcast@gmail.com, and you can listen to the BlockDrops podcast at Spotify, iColab, Faberbun Tech, and all of the other major streaming platforms. Yay! Shout out to Satraj for bringing such a fresh perspective on how to leverage regulatory compliance for growing your crypto company. Shout out also to Angela Mack for making this conversation possible. Don't forget to leave the ratings on your favorite player and check out the merch store at blockdropspodcast.xyz. This is all for today. Stay rare, stay weird. LFJ.